If people are not familiar with this segment, Dan is a CPA, nationally renowned. He's been on Fox News, on so many national shows, and we're just thrilled to have him on our program each and every Saturday morning at 7:45. And we're going to discuss audits today. This has to be a scary topic for a lot of people, Dan, first of all, right? I mean, what are the chances of people being selected for an audit? What's the criteria for it?
Let me first go to your question as to what are the chances of someone being selected for an audit by the IRS. So there is actually good news. When it comes to the audit lottery, it's heavily in your favor because only about 2 to 3% of the tax returns that are filed get selected to be audited. So there's about 130 million tax returns that get filed annually, and 4 million or so are what is selected for audit. Now, the IRS can't audit everyone, and when you think about it, the IRS and the tax filing system, you're really on the honor system because the IRS isn't sitting there looking over your shoulder when you're preparing your tax returns. So what they need to do is they need to do audits to check on things, make sure people are doing what they're supposed to. But the federal government's resources are limited, so they can't audit everyone. There's also statutes of limitations, so they don't have an endless amount of time to select tax returns to look at. And generally speaking, after 24 months from the time a tax return has been filed, they really don't look at those. It would be highly unusual for a tax return to be selected for a certain year 2 years after the fact. And the other thing about being selected for audit, or your chances for being selected by audit, it's that certain items could trigger an audit. For example, if you have a very large and rounded number as a deduction, that's something that could raise an eyebrow, for example. Now, let me also add specifically about the audit selection. There's a combination of factors that go into whether a tax return gets selected. And there's a computer factor and there's also a human factor. So three different methods. One, the IRS has a scoring method. So when your tax return goes into the system, it scores your tax return. And the higher your score, the higher likelihood it would be selected for audit. So if you have a high amount of deductions and low amounts of income, that would be a tax return that would get a high score, and that would put you into a category to potentially be audited. They also use a matching system. And most people are familiar with this on your W-2, on 1099s, on other documents. Your Social Security number appears on those documents. Well, when tax returns are filed, there's a matching system for those dollars to your Social Security number. If those are not matching up, you go into an increased chance of being selected. And then finally, there's a random selection, and that's just the unlucky lottery. So you get picked, and, well, your unlucky day. So the IRS uses historical audit results to figure out who they're going to target for audits. And there's certain groups that are just have a higher chance. Those are people who have cash businesses, high income earners, and sole proprietors, people who file a Schedule C on their 1040.
And of course, I guess the biggest fear factor is, getting in trouble, putting the handcuffs slapped on you. What's the audit that you end up with if you have handcuffs on you?
Well, all right. Well, that's the most extreme situation. That's the one everybody always wants to talk about, and I'll get to that.
Okay.
There are three basic types of audits. So the first type is called a correspondence audit, and that's you get a letter in the mail, and it's a simple request for information. So they want to have support or proof for, let's say, a certain deduction on your tax return. You make a photocopy of the support, you mail it in. As long as it's proper, the audit's over. That's the first one. The second one is an office audit. So you get your letter from the IRS, and it's an invitation to come have a visit down at your local IRS audit. But again, they're requesting very specific items to be supported. Generally, it takes one day. You bring the support for those items. You make your visit to the IRS audit. Assuming that you have everything in order, you're all done. Now, the third one is the field audit. That is a comprehensive audit. That's where the IRS is coming to you, and that's where they're basically looking at anything they want and everything they want on your tax return. Now, these field audits, King, they start as a civil matter. Generally speaking, the IRS doesn't just show up and say, all right, let's see your tax return, or let's see the support for your tax return. If you don't have it, you have the handcuffs slapped on you, and off you go. So these are civil matters. However, depending on the result of the audit and what the auditor sees, they could make what's called a referral to turn it into a criminal matter if they find fraud or if they have a strong suspicion of fraud. Now, when you're talking about a criminal investigation, which to your question was, that's when they're slapping the handcuffs on you, those are performed by special agents, and that's a very intimidating situation. These are IRS agents that are carrying firearms. So they're not messing around. So when you end up, if you're unlucky enough where you end up in a situation where you have a field audit that starts off as civil and it turns criminal because a referral has been made to a special agent, now we're talking about your freedom is on the line. So that's not where a CPA is going to be representing you, although the CPA could be part of the team. You need an attorney.
And once you get the results of an audit, are you or your representation, are they allowed to negotiate with the IRS after getting those results?
Absolutely, King. As they say, everything is negotiable. So when you break down whether you can negotiate with an IRS agent, if it makes sense, if it's reasonable, and how about this one? And if it makes the auditor's life easier, the auditor is going to be willing to sit down to hear what your offer or would be, or to get into a negotiation process. And I've actually experienced this. You know, I've had one particular case where I was representing a taxpayer, and the auditor was just taking forever to get the audit done. There were delay after delay after delay, and what a lot of people don't realize is that IRS auditors have a budgeted time frame. They have a case workload that they have to get through. It's not like they could just say, well, I got one audit done this year. You know, they may have hundreds of audits they need to get done. So what happened was this audit took about a year, and finally the auditor came into my office and she was honest with me. She said, look, I'm running out of time here, and I got to get this audit done. Let's sit down and figure out what we could do. And she looked at very, very little information, and we basically sat down, and we came up with a number that I knew my client would be satisfied with, and she was satisfied with. So we were done that fast. Hard to believe, but you could have those situations happen.
I mean, ultimately, they want to get the money. So, I would assume locking up somebody, you're not going to be able to pay those debts from a jail cell. But what are some examples of things that you should never do during an IRS audit?
Well, those types of things are really common sense, but they do happen. So, first of all, never lie to an auditor. It's actually a crime. If you remember back when Martha Stewart got in trouble for insider trading, she actually went to jail because she lied to a federal investigator. So it's the same thing here. When an auditor asks you a question, you're not permitted to lie to them. So that should seem relatively obvious. You should never threaten an IRS auditor, even if you're in a situation where the auditor is threatening you or you're perceived to be threatened. You can't turn around and threaten them the same way. You can't do it. And you never, ever, ever attempt to bribe an IRS auditor. Bribe, we always think of somebody has cash in a paper bag and they say, here, take this. It's as simple as offering to buy them lunch. You're just not permitted to do it. You know, IRS agents, by and large, have a lot of integrity, and that is a really slippery slope. I actually had one situation, King, where I was dealing with an IRS audit, and I had a client who was very affable, very nice guy, and I didn't warn him, and he walks into the conference room, and he says to the auditor, hey, can I, buy you lunch today? He was just being very simple and true, and it was innocent, but it was a bad move. And I didn't even give the auditor a chance to answer. I said, no, we're busy. It's okay. Thanks. And then when he walked out of the room, I said to the agent, I said, look, he's just a really friendly guy. He didn't know any better. So even something as simple as that, you want to make sure that it's not misunderstood, because if an IRS agent thinks you're bribing them, that's a situation where you could have that criminal referral right on the spot.
They've said in the past that the only thing that could bring down Al Capone was the IRS, and so many people are afraid of the IRS. Is this justified, Dan? Is it a bad rap? Is there such a thing as a kindler and gentler IRS?
Well, that's good. The IRS has tremendous power, so I guess you could say there's no need for them to be kind and gentle, but they are required to be professional, and again, by and large, they really are. But remember, the reason the IRS has so much power is the burden of proof is on the taxpayer. So you have a situation where they come in and they ask you to prove certain items on your tax return. And if you can't, then the ball is in their court to say, well, then that deduction didn't exist and you get no credit for it. And now you're looking at a situation where you owe more tax, penalties, and interest. So, you bring up Al Capone, and that was such a famous case. And that proves how much power the IRS has, because they prove that it's easier to prove tax fraud than murder. Why? Because there's always a trail. So, and the other part of it is, if you're a criminal, even if you're a drug dealer, you must declare all your income, even if it's from illegal sources. So that's why the IRS has so much power, because fraud is about the intent to deceive. So even if you didn't declare, let's say, $100 of income purposely, you intentionally did not declare income, and that intention becomes fraud, and that's why the IRS has so much power.
Dan, just another great segment of Dollars and Cents every Saturday morning, 7:45 a.m. They can find out more about you at Geltrude.com. You also have a great YouTube channel. Search Dan Geltrude. Dan, have a great day, and we'll talk to you more in 2017. Thanks for another great segment.
Thank you, King.